This is not worth buying unless you're scalping. We the buy limit by a couple of ticks, which kind of sucks, but if we miss that, it's not really worth buying here at this point because this is a heavy resistance. And the reason why it's a heavy resistance is because if you like scroll way left, if you scroll way left, let me move this over real quick. If you scroll way left, do you see how this is a point of resistance that is met several times? Y'all see it?
Yeah.
Mm-hmm.
This is where playing a buy gets dangerous. This is where it gets dangerous because if you look at the weekly chart, there's usually resistance at around, as you can see, about 1240 to 1242. So like everyone who's buying here, those are brave souls. I'm a brave soul, but I also like to play smart. If we didn't catch the buy limit down earlier at 1335, buying here is really not worth your time. Yes, it can go,
Right.
It can go up, and it probably will, but we like to take the smarter moves if we can. Does that make sense?
Yeah.
Can anyone explain back to me why I said that the gold was going to gap down to 1335 and why we had a buy limit there? Can any of y'all explain back to me what the logic behind that was?
Well, from my understanding, you said that there was some heavy push up on Thursday and Friday, or like on Friday or something like that, and it was like a heavy top or something, and because of that, it went all the way up there. It failed to stay past the 1342 because and so because of that, looks like it's hitting heavy resistance up there. So your analysis is that it will be dropping or something like that, right?
Yes, but what you just said, does that actually make sense? Like, do you see the logic behind it?
Yeah.
Welcome to naked trading. All you're doing is using your eyes and some common sense. And you don't have to use indicator. Like, you didn't have to use an indicator to figure out that this was going to drop. You know what I mean? Like, you didn't need an indicator to clearly see that since this could not surpass this and we didn't have any news, there was a good chance it was going to drop. The only problem is I don't have a crystal ball and we just missed it. We were so close. You know what I mean?
Yeah.
But as I did mention, the minute the market opened, if gold happened to gap down, it was a clear buy. Now, can you explain to me why, if it gapped down, why was it a buy?
Because it hit support, and then it was going to go back up to resistance.
Again, a simple answer, right? A very, very, very simple answer. For every single causality, there's an outcome that comes out of it. Like there's always cause and effect, right? Now, if the gap had opened, let me zoom out real quick. If the gap had dropped and it opened like right here or like right here, which is ridiculous, but if it happened here, this would have caused a massive sell. This would have been a massive sell, and gold would have probably dropped to about 1321 or so. The reason why it would have dropped to 1321 is because that is the heaviest support since this rise from up here. So whenever you're
you said it would have broke through support, and then it would have dropped down to the next level of support because that would have become resistance, correct?
Yes, exactly. That's exactly it right there. So, like, I can tell you all of this without having to use an indicator because, I mean, it's literally right there. Do you see what I'm saying? So, whether you are trading Oh, sorry. Go ahead.
No, so because one of the things that I was doing, and I don't know if you do it on this chart, but sometimes I draw those rectangles where I see support and resistance. You know, I see those little support lines, and then I figure, you know, without the Fibonacci or whatever, once it breaks through that line of support, I know that whether it's going to go to the next line of support or if it's going to drop down to, you know, to either it's going to go up to resist to a new level of resistance, or it's going to drop down to a new level of support using those Fibonacci rules or whatever.
You can, okay, for instance, I personally don't use fibs often.
Okay.
Fibs are great.
Okay.
They're wonderful. And that does still count as naked trading if you're using fibs, because all they are price ratios. They're just, okay, here, let's have a quick discussion about just trading in general. The markets are really slow. We're not really going to catch anything major right now, not for about another hour or so. Let's have a quick discussion on exactly what people are doing and why whenever they're trading on these charts. So whenever you are starting to learn how to trade Forex and everything, right? Let's see, this looks like this is going to go up and probably peak at about here and then come back down. But anyway, because right here is a bullish pennant. However, I would not buy this because, like I said, you're playing with a bunch of retail traders. You don't want to play with these people because retail traders are usually retarded. These people are not worth your time. Anyway, it's the truth. It's the truth. There's a reason why retail traders usually lose at Forex, and it's because most of them are retarded. I'm not being completely honest. So,
but how do you know? I mean, how can you look at a chart and say it's going to go up to here and then drop? You lose me. People do this all the time. Exactly correct. I just don't know how you do it.
Price action, which is something we'll be going over.
Right.
I learned price action literally by staring at charts all night. I'm trying to make sure y'all don't have to do that. That's one of my goals. Is, when I first started trading back on April 13th, how I learned is I literally went back into undergrad mode. I became a naked mole rat, and I literally watched charts up and down all night until it just made sense. But y'all shouldn't have to do that, so I'm going to make sure y'all don't.
Thank you. We appreciate that.
No, no problem. Trust me, it's not as fun as it sounds. Oh, let's see, Jeff, can you make me the presenter? Sure. Hold on. Okay, Jeff, you're now the presenter.
I didn't ask for that.
Okay, can y'all still see my chart, or has that changed?
You said Jeff can.
Yeah,
I didn't press.
On Jeffrey's screen right now.
I didn't press anything for that.
Okay, well.
So how that happened? I didn't move anything.
In the meantime, we're going to have that discussion. Okay, so when you're taught how to trade Forex, you're taught like all of these different strategies and everything, right?
Yeah.
Right, like you're taught many different methods to help you print money. But let me ask you a question. How come all of these methods work? Why do all these methods work?
Because the chart only moves up and down, so eventually it has to work because the chart's only move in 3 directions, up, down, and sideways. So you got to eventually be right at some point in time.
That's pretty good logic, and that's actually the logic of a lot of swing traders and guru traders. There's actually a much more complex answer to this, but it's also simple. What if I told you that the reason why all of these strategies work is because these are the strategies that are taught? Now, these strategies that are taught, why do they work? Because they're taught to everyone. And if they're taught to everyone, they work.
Hey, Clay.
You guys realize that a lot of these strategies that you see and a lot of these patterns and everything, this is how price is controlled in the market. Y'all realize that, right?
Hey, Clay.
Let's think about it from a human perspective. If it was up to normal people, if it was truly up to normal people and normal people logic, normal people would make gold the price of a potato one day and worth 10 countries the next. Y'all realize that, right? What's up, Jeff?
I can't get back to my screen. You guys got me sharing. I don't know what's going on. You got me. My screen. Your screen disappeared.
Looking at the pound and the New Zealand dollar. See, Jeff, this is what I was warning you about.